We are experiencing technical difficulties. Please stand by.
The market is always having technical difficulties, but Money Life can help. Every Friday, we're talking technical analysis.
We've come for help and we're not leaving without it.
Are you confused by the technical jargon and terms?
This is what makes you confused! Don't you get it? This is confusing you right now, isn't it?
Our guests will talk about the techniques they use each day to analyze the market and tell you what they see now in some of the market's numbers and charts.
Please stand by. Technical difficulties are temporary.
They'll tell you about the trends they see and how you might react to them to plow through the market's technical difficulties.
Yeah, I'm pretty confused, all right.
So stay tuned and get ready to cut through the confusion with Chuck Jaffe talking technical analysis on Money Life.
Indeed, I am talking technical analysis on Money Life, and I'm doing it with Toni Turner. She is the president of the TrendStar Group. She is the author of Invest to Win, and you can learn more at ToniTurner.com. She's on Twitter at Toni Turner Trade. Toni Turner, welcome back to the show.
Thank you, Chuck. Thank you for having me.
It's called TrendStar Group, and we know that you like to look for trends. But this market, well, the trends have been kind of goofy this year. You know, the trend was very up at the beginning of the year. Then it was, here comes volatility, the market moves down. But then when people thought maybe it would stay down, it kind of got to trendless, and it kind of has been wishy-washy. We've seen bad things in the bond market. The stock market has recovered, but it hasn't broken back to new highs. So what is the trend right now?
The trend is the S&P 500 is standing on the curb, looking both ways and deciding whether it really wants to start back up again. And maybe, you know, Chuck, the S&P on January 26th made an all-time high, a closing high, I'll call it, of 2008 at 2872, and hasn't been there since. And technically speaking, we had one triangle that it broke out of. And we were also happy a couple of weeks ago because triangles can be really good or really nasty depending on how they're shaped. And now it's kind of going sideways again. It's like, no, it's not in a committing mood right now. There's just no commitment with the S&P. The only thing we can say that's good is that it's above two major moving average lines that are kind of important in technical analysis. The S&P is still above the 50-day and the 200-day moving average, and that's good. We can say that's good. It's not in the best shape it's ever been, but it's above those lines. And of course it's May, and of course we're looking towards summer when volume gets lower and the market gets a little more volatile. So we're in a wait-and-see mode, and there's not a heck of a lot we can do about it until the market wakes up and decides which way to go.
So what are the marks that you're looking at? Because as you point out, well, it's above the two longer-term averages, but it has been range-bound for a while. It has tested resistance, but hasn't been able to break through. It hasn't really gone back to test support, but the expectation at this point has to be that whichever line it breaks through first, breaks through and holds, that as soon as it gets through either resistance or support, it's moving hard in whatever that direction is, right?
Well, yes. Now, I can throw a curveball at you, too. The Russell 2000, as you probably know, is a leading indicator for the broader market. The Russell 2000 is a real happy camper. It broke to new highs, an all-time high on May 21st. That was a few days ago. That was 10 days ago to 1647. And the Russell 2000 is interesting because it's made up of usually U.S.-centric stocks, companies that don't sell their goods overseas or their services overseas. So the U.S. stocks are happy campers. And actually yesterday, the IWM, or the Russell 2000, made an all-time closing high up at 1647, and it's a happy camper, and it's looking at the S&P 500 like, so what's wrong with you? But that's because the U.S.-centric stocks don't care about Italy. They don't care about tariffs. You know, they're just all snug here in the U.S. It's the Dow that cares a lot about what goes on around the world that's falling, of course, and the S&P is hanging on for dear life.
We should point out that the Russell set its record on Wednesday. My audience hearing this on Friday, we don't want them to be confused.
I beg your pardon. Yes, that's true.
So as you look at this, if you had to guess, I mean, and you do because you have to make investments, are you sidelines while you wait and see? Are you constructively positive, thinking, I'm tilting that way? How do you play this wait and see period?
For me, wait and see. I'm looking at, there's what I want to get into, and that there are some really good REITs out there, but of course they're affected by interest rates and what the Fed does to a degree. But the IYR, the real estate ETF, that full of REITs, is starting to come back up. So I'm looking at some of these. They've had the tar beat out of them, but what's holding me back from that is seeing if the Fed's going to raise interest rates on June the 13th again, because, of course, if the Fed raises interest rates again, it's possible that people say, oh, I'm not going to buy stocks, I'm not going to buy REITs, I'm going to buy treasuries because they're safer type thing. And the REITs and the utilities, same thing, they're bond-like stocks. I'd like to kind of get into those, but I'm not sure what the interest, if the Fed raises rates, and of course there's a degree of certainty among some that is going to happen, then me and the S&P, we're kind of doing the same thing. We're kind of standing on one leg and the other. And if I get into any stocks here, I'm actually looking for stocks that just, as I like to say, don't care what happens in the broader market so much. And there are some really good opportunities out there now. When I see them, maybe I buy really small share size if I think they're good. And again, some of them are REITs. I'm looking at a couple of utilities, but I'm buying small share size because, of course, if the S&P 500 breaks to the upside and rallies, then these stocks will be ignored and we'll be back into tech stocks. So it's kind of
So it's truly wait and see. Wait and see. Find those opportunities that are not market dependent right now. Nibble at them, but otherwise try to figure out which way the market is going. Toni, thanks so much for the insight. Tell you what, we'll have you back in the not too distant future, and we'll see if the market's made its decision by then.
Okay. Thank you so much, Chuck.
Toni Turner, everybody. She is the president of the TrendStar Group. You can learn more at ToniTurner.com, on Twitter at Toni Turner Trade. And remember, she's the author of Invest to Win and much, much more. So check out her website to learn more about Toni and what she does. Well, this was a fabulous way to start our first show in June, but we've got lots more coming. Up next, Linda Yu, author of What Would the Great Economist Do? Stay tuned. We'll be right back.